Welcome back to Trades and Gains, everybody. As always, this video is powered by Investor Central Club. Use that code SUPERMAX20 over at investorcentralclub.com to get 20% off your first month. And well, welcome back to our weekly outlook report, where we try to make sense of a market that printed $68 billion in revenue last week. And well, the market said, meh. That's right. Nvidia, well, it absolutely nuked earnings, and the stock dropped over 6%. Let's make sure. Yup. That's exactly what happened. I just wanted to double check my facts there, folks. So they nuked earnings, as everybody was aware. And the stock, well, it dropped 6% over the week. You would think a company that printed $68 billion in revenue with a strong cash flow, with no debt and crazy margins, would actually be able to beat earnings. Well, that didn't happen. You ever cook a 5-star meal and someone says, yeah, but I'm keto? That's basically Wall Street right now. They are the annoying person who asks for vegan everything, and it's like, I want a vegan steak. Well, you know what? Just don't eat steak. So, new rule. If you beat earnings by a mile, raise guidance, and the stock still tanks, it's not about fundamentals. It's about positioning. It's about fear. And it's about everyone being too crowded into the same AI Uber. So, before we dive into what to expect this week, let's talk about our market scorecard and where we stand. So the S&P 500 is at 6,878. It's barely green year to date. The Dow Jones Industrial Average is up 1.9% year to date, and the Nasdaq Composite is down 2.5% year to date. The translation, we've got pretty much industrials holding up, tech wobbling, AI leadership is cracking, and geopolitics are bubbling in the background. This is what I call late cycle personality disorder. It's like BPD, borderline personality disorder, except it's like for the stock market. So let's go ahead and talk about what really spooked the market last week. It wasn't Nvidia's numbers, it was a narrative shift, okay? Some research report floated the idea that AI could displace white-collar workers en masse. And suddenly, we got a mini bank run in AI names. Stocks like IBM, Zscaler, yeah, they got smoked. This is classic crowd behavior. Everyone's long, everyone's confident. Then all of a sudden, one scary headline comes out and boom, musical chairs, but there are no chairs here. AI isn't being priced as infinite upside anymore. It is being priced as, what if we overbuilt? What if margins peak? What if CapEx slows? That's not a collapse, people. That's rotation psychology. Now, let's go ahead and enter this week's main character, Broadcom. Yeah. Broadcom reports on Wednesday, babes. And this is huge. Or as Trump would say, this is huge. This is huge for America. And the reasons why, I'll give you 3 of them, all right? Nvidia is GPUs. Broadcom, well, that's infrastructure. If AI spending is real, guess what? Broadcom is going to go ahead and show that, baby, because they're the ones building the infrastructure to support the forward efforts of this AI build out that we're seeing. Now, if Broadcom disappoints, that's when AI fear spreads from positioning shakeout to a macro slowdown. Also reporting, we have Marvel Technology, Target, and Costco. Yeah, retail earnings matter here, folks. If AI is expensive, consumers need to stay strong to support the market. If retail cracks and AI wobbles, oh my God, that's when volatility will spike, my friends. Now, Friday, we're gonna get February non-farm payrolls, okay? Now, let's talk about expectations here. We're expecting about 60K plus jobs, okay? 4.4% unemployment, and wage growth to be about 3.7% year over year. January printed 130K, way above expectations. But here's the catch. Revisions showed 2025 averaged just 15,000 jobs per month. So can we really trust these jobs reports that we're seeing? Can we really trust it? Can you let me know in the comments below? Do you trust the jobs reports? Do you trust the jobs reports, or do you think they're fickle? Because sometimes I think they're fickle. I don't think they're real. Now, long story short, that's not a hot labor market. That's a we're hiring, but we're whispering about it labor market. If you read any article right now, it's going to tell you we're in a low hire, low fire, low layoff market, which isn't great for people, or the Fed in this case, to cut rates. All right. Now, the Federal Reserve is going to meet March 17th to the 18th. And right now, the market's price a 94% chance of no change in rate cuts. Yes, that means, well, the market's not expecting a rate cut coming up. And I've been telling you guys this since like January. So if you're a part of Trades and Gains and the daily videos that I make, you were already hip to this. This isn't a shock to our community, right? We were bred for this, okay? Now, if jobs surprise hot again, rate cuts in 2026 may get priced out. If jobs disappoint, however, suddenly recession chatter is going to ramp up. So this report is the pivot. It's the pivot, folks, okay? Now let's talk about geopolitics, the quiet risk, U.S.-Iran tensions, embassy personnel authorized to leave Jerusalem, military buildup talk. Markets haven't priced this in aggressively quite yet. Oil, while it hasn't exploded and volatility hasn't surged, but this is the kind of background risk that amplifies moves when data hits. Think of it as, well, basically dry powder for the market this week. So whatever narrative or whatever they're going to try to spin this week, well, you're just going to have to take it with a grain of salt and understand we have geopolitical risks that are running through the market right now, okay? So be careful this week, be nimble, be light on your feet. Don't marry the position, just date it, because if you marry it, well, that's how you get burned in a divorce, all right? Now we have three paths, all right? Let's talk about our big themes this week. Scenario 1, Goldilocks. Jobs, they're modest. Broadcom is solid, and retail is stable. The market breathes relief, and AI finally stabilizes. Scenario 2, the AI rotation. AI rotation. Broadcom, it's decent. You know, they beat numbers. Guidance maybe falls a little bit short. You know, jobs come in fine. That means they come in around expected, maybe 5,000 under, give or take. But guess what? Investors, they rotate out of mega cap AI into value and defensives, right? And then scenario 3, crack. And no, I'm not talking about when Pookie hit the pipe and was never the same. We're just talking about a crack in the market. We get weak jobs. Broadcom is soft, like it forgot to take its blue chew. Retail, well, it's cautious. Now, recession fear plus AI deflation narratives combine, and that's when VIX will decide to, you know, wake up, baby, all right? And when we see VIX wake up, what can we assume? The rest of the market is going to tank, all right? So now let's talk about the psychology check. This isn't 2022. This isn't 2021. This is 2026, folks. I have a 2007 Subaru Impreza, and that car is 19 years old, okay? Okay, and it's from 2007. I was 17 in 2007. Crazy. But in 2026, AI built massive expectations. Positioning is crowded, and macro is fragile, but it's not necessarily broken yet. When perfection sells off, it means sentiment shifted before fundamentals did. And that is very, very important, okay? if sentiment shifts, that's when you need to get hit. All right. So like if you see, hey, I'm seeing a lot of people and a lot of big money prints rotating out of tech. I see a lot of insider sells rotating out of this AI narrative. Yeah, that means the narrative shifting, because you think they're just taking that money and sitting on it. No, they are rotating into defensives. They're rotating into other sectors where they are going to see momentum because they feel most of the market's over leveraged in AI, right? Because guess what? Markets move on second derivatives, not headlines. And by the way, speaking of second derivatives, that's why we have a second derivative channel in our trades and gains indicator, okay? Or it's not a derivative. This is our standard deviation. So just know, market works on math 9 times out of 10, folks. So here's the deal. AI, it didn't implode. Jobs, they haven't collapsed. And consumers, well, they're unfortunately not dead. So we're not in a, well, Walking Dead remake, I guess. But guess what? This market is acting like it just watched a documentary about itself at this point. We're entering the phase where winners need to keep proving it. Every earnings beat needs to be flawless, and every macro print can swing sentiment. This week, Broadcom decides if AI is a bubble or just overbought. The jobs report decides if the Fed blinks or it takes its blue chew and gets a little more stiff, right? And geopolitics decides whether the background noise gets louder. So go ahead, put your strap on and buckle up, because February was the appetizer, but March is where the market decides what story it wants to tell. Thank you all for tuning in today. This is Max Pitts with Trades and Gains. I'm your main host, and don't forget, this channel is powered by Investor Central Club. Use that code SUPERMAX20 at investorcentralclub.com so you can get 20% off your first month. And yeah, I hope you guys all have a great Sunday, and I will catch you in the next one.